What's poppin'? Brand new whip, just hopped in. I got options. I can pass that bitch like Stockton. Just joshing. I'ma spend this holiday locked in. My body got rid of them toxins.
What's up, guys? Welcome back to the channel. We're going to be doing a trade recap right now. Please bear with me. I am extremely frustrated. I just live recorded this entire trading day, and because I don't want to give you guys a playback version. Who the fuck does that? But unfortunately, I have to, because Zoom, if you're watching this by any chance, you go fuck yourself. I can't even call you because I have to pay to call you, which is fucking bullshit. I will show you a picture right now of what the Zoom recording turned out to look like. And yeah, it's just cut off 75% of the screen, which is fucking bullshit. So I guess I gotta do a playback version right now. And I just recorded a playback version, realized that the mic was muted the entire time. So now I gotta do it one more time. So I'm a little bit angry right now. So I had 4 trades today. 3 of them are on the screen. I had AMD, Microsoft, CrowdStrike, and Qualcomm. And the Qualcomm trade is the reason I really wanted to show you guys the live recording. A lot of fucking bullshit's happening to me, and I'll show you once we go over the Qualcomm trade. Alright, so let's start with the S&P 500, which is the top left screen. And it gapped up today. I believe it was up 2% when the gap up. So my guess for the day, this is kind of my game plan, what I was thinking was going to happen, was the S&P 500 was going to come down initially and then go up and then have another run. So, as anticipated, the S&P 500 came down, first 30 or 15 so minutes, and then started to make its way forward. It was really good. It was having a nice time going up. As you can see right here, I'll show you guys when I do my AMD trade. This is how I got into my AMD trade. I saw that the S&P 500 touched the VWAP. Now, if you don't know what the VWAP is volume weighted average price. And a lot of people use it as like a support or resistance level, right? If it's above the VWAP, it's bullish. If it's below the VWAP, it's bearish. It's just kind of like a mean price, and it gives weight to volume, which is nice because obviously if the price is going up on no volume, it should have less weight than the price is going up on volume. Now, there's a lot of algorithms too that have this factored into their formulas to buy or sell at the VWAP. So I'll show you guys. This is just the point I'm talking to when I go into my AMD trade. This is how I bought AMD. Now this red line is going to show the time, the exact time where I bought AMD, and you'll see the time when I go to that chart. But yeah, so it was up. The SPY was up trading all day, and then came the news while I was still in a long trade. Fortunately, I still came out with some profit. The news that Governor Cuomo of New York said that all non-essential workers will not be able to work, I believe starting Monday or starting today. So once that came out, the market, as we can see here, just started going down and down, and then made a really, really nice bear flag right here, which I capitalized on Microsoft when we go on for that. And then it just continued to keep going down and down. We saw a really ugly day like we've been seeing. Not ugly if you're a day trader, though. These are really good shorting opportunities. And I honestly am more short biased than I am long biased, so this was a nice opportunity for me. So that was the market. It's down. It finished the day down at 4.3%, and it was up at one point over 2%, maybe up 3% on the day. So ugly reversal here. All right, so let's go on to my first trade of the day, which was CrowdStrike. Misjudged CrowdStrike. It was up 20% on the day when it first opened, right? Gapped up 20%. So I was expecting a pullback from the beginning, and then a nice move up forward in conjunction with the S&P 500, and then I was gonna expect it to sell off a bit later on. So I kind of got in a little bit too early, right? I was gonna get in the high of the day, right? 5 minutes into the market open, and I bought this huge spike up, right? And this is, if we go back to the S&P 500 real quickly, the market kind of spiked up a little bit. You thought it could have possibly ran without really any pullback, which could have happened. So it spiked up. I bought it. I kind of chased it a little bit, and I saw that it continued to go. So I bought it, and it continued to go.
And I just knew this was an unsustainable candle, right? This was just a lot of people buying it, trying to buy the breakout. So I immediately sold it. Once I saw that for $100 gain, I didn't like the setup anymore. Like usually when that happens, and you can see right after we have this very large red reversal candle. And I kind of saw that foresight because I've been trading for so long that when you have this big breakout, especially when the SPY starts to pull back, it wasn't a strong breakout on the SPY. You know, it was just the overbought, and it's going to get sold away right away. So I got out of the trade and I was looking for another entry. So then 49.80 was my entry, was my intended entry. But I kind of got faked out with the S&P 500. So I went against the S&P 500 in this. And this is why we always have to follow the S&P 500. So this was the period where the S&P 500 was still downtrending, right? I said that I thought it was going to downtrend for 30 minutes or so and then start the uptrend. Because a lot of times in the market, you'll see a trend change around 10 o'clock. Either that's people just selling when the market's up a lot, or if people are buying when the market's down a lot. And then you'll usually see the initial gap start to go in that favor again. So I kind of went against the market a little bit because I thought CrowdStrike was really strong. So the S&P 500 was coming down a lot in the morning, and CrowdStrike really wasn't coming down with the market, right? It was holding. So I thought it was very strong, and I thought it was going to have a really sick day today, at least in the morning. And I decided to get into it a little bit early. Didn't work out for me. CrowdStrike did not have a great day. It just kind of faded down, and I took a quick loser on that. So that was about $225 loser. Nothing big. I didn't go full size or anything on that. I went about half size on that trade. $230 loser, plus I made $100 on the trade before, so it only came out to $127 loss. All right, so now we're gonna go on to AMD, which was a really good trade at one point and then kind of turned on me. So looking at it to AMD, I bought AMD because one, AMD was way stronger than the market at the time. It was up around 5% when the market was up 2%. And I bought it based on that VWAP I was telling you. As soon as the SPY hit the VWAP, I bought AMD, but I bought half size. So I bought 400 shares at 41.64. Then the point for me where I thought that if AMD crossed, it would continue was that 41.88 area. And my other 400 shares to go full size to that 41.80 area. I actually got a really good fill on this. So when I hit market order, AMD actually dropped down a little bit, and I got filled at 41.75 on there, 76. I trusted AMD as long as the market was uptrending, because AMD was much stronger than the market. It had a nice uptrend going, right? And as long as the market was continuing to go up, I had trust in AMD. There was a lot of buying going to it. And even when they were selling in the market, AMD held pretty firmly. So I had trusted AMD as long as the market was uptrending. You've really just got, the S&P 500 is the edge. If you can maneuver the S&P 500 and then maneuver with companies that are stocks that are underperforming and overperforming, that's really your edge in the market, because if you have the direction and then you can kind of leverage yourself, what companies are doing better in an uptrend, you can make money off going on the uptrend. Whereas like if it's a downtrend, if the S&P is going in a downtrend, you go for the underperformers and then you make money off of the underperformers in the downtrend. So let's go back to the trade. So yeah, so I was ready to hold AMD, and as long as the market was uptrending, that was my out. The market was my out on this. So obviously not obviously if you're new trade, but I took off half size as soon as I reached what I was risking on the trade. So the VWAP for AMD, which is this purple line, was my exit. Just in case everything went wrong, that would be my exit. So I took off half size once it crossed my risk level. And that just meant that the trade was free. No matter what happened, I couldn't lose money on the trade. I was playing with house money because I already took off profit, and whatever profit, so that profit was symmetric to my risk, right? And since I took it off, and then even if the remaining half shares went down to my exit point, my max risk, it would be symmetric to the amount that I made where I just gained profit and took off half size. So then I was watching AMD with the SPY, and as we can see, when the SPY crashed because of the fact that New York there can't be any workers, AMD went down with it. So I used the SPY VWAP cross as my exit, and that's why I got out at 42.03 for AMD. Then my second trade, so at first I did not know why the SPY dropped. I thought it was just a lot of selling pressure at the time. I didn't realize that there was actually news behind it, that all these states were getting rid of the worker, or telling the workers they can't work. So I thought the AMD double bottom. So I was playing it again over this 96 area. So once again, I bought a little bit early on AMD. I saw the SPY also had a double bottom. And then I kind of waited until it got over that 97 on let's go full size again on this position. And then I realized that there was actual news behind this, and that the S&P looked like a bear flag, and I got out right away. I think I got like $10 of profit. I just closed that right away because I knew as soon as I heard that, I knew the market was going to crash for the rest of the day. Plus, the market started bear flagging. I was like, Doug, well, I've seen this happen a million times. I know this is going to continue to go down. So I got out of AMD for that. Now my attention went for short selling because I wanted to find weaker stocks in the market. So then I came to Qualcomm up here. Then I came to Microsoft. Initially, I was long Microsoft, right? There was a really big buy or a really big seller at 145.50. So I decided to go long with 200 shares at 145.50. I was just kind of following the market, and I didn't like what I saw on Microsoft. There was a lot of selling pressure up here at this 147 level. So I was like, you know what? I didn't like what I saw, so I just took profits and got out. You could do that. It's perfectly okay to just, if you don't like what you're seeing, get out of it. That's perfectly fine. So here we go to my better trade in Microsoft. So I saw that Microsoft was flagging, and it went down very heavy when the S&P 500 went down. It was flagging, and this looked like an awesome opportunity to short Microsoft. So what I was doing for this is I was taking very little risk and shorting at the top, right? I was shorting at the resistance level for Microsoft. So I shorted at 145 for Microsoft, just 50 shares. You know, I was risking about $50 on that just to get in early, just to get a better feeling. And then I shorted another 100 shares under where the breakout would be, because I knew that once the market falls down, started coming down again, the bars were gonna be ridiculous. It was gonna move so fast, because that's what happens when the market kind of crashes down. It moves very, very fast. You get very bad fills, and if you're not on your game, even if you have the right idea, you're gonna lose money just because it's moving way too fast. So Microsoft worked perfectly. You know, it broke down the levels and then it just dropped down. I wish I didn't sell so early. I mean, obviously I didn't know, but it really started dropping quickly. All right, here comes the bullshit Qualcomm trade. Now, all I could say is, all right, a little pre-story. I was shorting this the same time I was going to short Microsoft, right? This is also on the screen while I was shorting Microsoft. Same exact time with S&P. When I went to short this, my fucking TDA platform, this Thinkorswim platform, is so goddamn laggy. It's so bad that I typed in 150 shares. Fine, it was good. I hit enter, and then I clicked short, or the sell button. Shorted the shares. Then I realized that the 150 lagged somehow and went to 1,500 shares. So I accidentally shorted 1,500 shares. And this is why I wish I had that video, because I was freaking out when this happened. Because I just, out of nowhere, shorted $100,000 worth of Qualcomm when I only meant to short $10,000 worth. You know, it's a big difference. And this is a very volatile market. Like, this could have shot up very quickly. It just took me out for like a $3,000 loss. I would have got stopped out for like a $3,000 loss if I were to get stopped out. So I actually sold it just automatically and ended at a $150 loss on that. And then I try to make it back a little bit later, just make back the 150 because I was so pissed that I just literally threw money out the window. But at the end of the day, $156 positive. Pretty okay day for a Friday. You know, usually Friday is my worst day. Usually make the least amount of money on Friday, so decent. Yeah, it was a pretty good day. I hope you guys enjoyed that video. I promise I will not be doing my trading things like this anymore. They're going to be live, so you're going to see my raw emotion and action, because that's really entertaining, because I kind of freak out when I trade, especially when some BS happens. But yeah, I hope you guys enjoyed that video, and hit the subscribe button and give me a nice thumbs up.